Yo, what's good YouTube? It's your boy Shaq. Welcome to my channel, Oh No Man Anything. And the purpose of this channel, man, is to help you break those chains, catch these pips so that you can live your life. I got a special video for you today. I'll be breaking down analysis on one of my trades this week. I truly hope that this channel can help you in your endeavor to become a consistently profitable trader. Well, without further ado, let's hop to the charts. YouTube fam, appreciate you tuning in. This is going to be a trade recap of the Canadian Swiss trade that I took this week, my $900 trade. I do want to go ahead and point out before we get into that this is a live account. Just wanted to point that out, and also you can see the arrows in which the trade was executed. I have my Oendo, which is my broker, linked up to my TradingView account, so this cannot be fluff. Wanted to point out that this is real money that I make on the market, man. I've been doing it for over 5+ years, and I will never show you demo accounts, demo trading accounts or anything like that. I mean, it's just not gonna happen, man. Not gonna happen. So without further ado, let's get into the 3 reasons why I got into this chart. And we'll even talk about my plan for exit, because before you execute any trade, you need to have a plan or reasonings why you got into the trade, and you need to have a plan of action for getting out of the trade. So we'll start with the first one: structure, break and retest of structure. So if you have not watched my video on do you understand the language of the market, please do go and watch that video. Even if you think you understand market structure, if you're a new beginner, if you a struggling trader who's still trying to really grasp how you can begin to be consistent in your efforts against the market, right? To make money against the market, then please go watch that video, man. It's very insightful. Yes, it is a bit lengthy. Not gonna lie to you. I think it's like 25 minutes or whatever. But guys, if you really want something in life, you're gonna put the time in. Stop looking for the little 3-4 minute videos and stuff all the time, man, because I promise you the videos that I got educated on, because if you watch my my journey of Forex, I was self-taught. I didn't get a mentor. I didn't buy a course or anything like that. Nothing against any of that. But I watched YouTube videos, and some of the more lengthier YouTube videos were some of the ones that I learned the most from. So yeah, I'll just leave you with that. Let's get into it. Structure, break and retest of structure. So we got an initial point here, impulse leg, structure high. We got a retracement pullback, higher low, all right? And then we got a new structure high when the market was able to conquer this structure level here and put in a new structure high. So as the market was retracing, I'm looking for reasons to buy. I'm looking for this support level to hold, right? I'm looking for this support level to hold, because even here we have a minor, right? Minor, where the market on the impulse leg got a bit of a rejection, pushed up, and we retested that level, right? So I'm looking for this level to hold. I'm not gonna get into the trade all willy-nilly. I need to build up a case to get in, but I'm looking, I wanna say this was a sell trade, but initially at this level, I was looking for bullish trades. So when we got this red candle here, stopping at this structure level, I'm like, okay, all right, I do wanna see what's gonna happen on this next daily candle. And as you can see, we have a minor break of that structure. All right, I wasn't all the way convinced just yet on this day that we were going to really push down lower, because if you can see, we have this wick, and the sellers, like usually on those breakouts of those structures, I want to see a nice in a sale, right, a nice bearish candle where the sellers are able to keep much of the ground that they covered. And if we're in a bullish, I want to see like this one here. I want to see that the bulls were able to keep most of the ground they covered. And when you see those wicks, that means that the sellers or the buyers, if we were an uptrend, were not able to keep a lot of that ground that they covered. So I kind of just sat on my hands, guys, and that's a lot with trading. I just sat on my hands, and on this day here, when I saw this big red bearish candle, that alerted me, okay, now the market is serious, right? Because each of these particular times, all we see is wicks down to this level. If you can see, all these just wicks down to this level. Well, this is the first time, right, in 1, 2, 3 days that we actually get a close down, you know what I mean? And the bears are able to keep a lot of that ground that they covered. And so at that point, okay, I'm looking for my break and retest, all right? My break and retest, guys. This is literally what I do I would say like 90% of the time. Most of my trades fall into that. Break, retest, boom. All right, and that's done in a downtrend, that's done in an uptrend, it doesn't matter, whatever the case. 91, 92% of the time, that's what most of my trades look like. Forex doesn't have to be hard, but let's go ahead and continue. So at this level here, looking for a retest. I'll be completely honest with you and keep it a buck with you guys, because I want to be transparent with you guys. As you can see here, there's an arrow right here and an arrow right here. There are 2 arrows right here and 2 arrows right here. So those 2 arrows that are stacked on top of each other, that was the winning $900 trade. All right, this arrow and this arrow here was a result of FOMO, fear of missing out. So at this point, I was really concerned. All right, so I was really concerned as I saw the market pushing down that, man, I'm gonna miss out on this trade. It's not gonna give me a retest. And the market basically played with me all that long time. And I was sitting there saying to myself, man, you're involved in the trade and you're not supposed to be involved in the trade yet because you have not had the retracement. So I did go ahead and get out. Luckily, I was able to break even. So on this candle here, I was able to break even. I think I probably might have lost like 3 or 4 pips on the trade. And so on the next day, I was able to finally get that retest. And that's why you can see there are 2 arrows there. I was able to get, I think like one came in here and then the other one came in there. So I was able to get that retest and get involved where I was supposed to be in the market. So hope you appreciate the honesty that even YouTube traders, even successful traders, still deal with psychological things such as fear of missing out. I try to keep that down and not make those kind of psychological mistakes all the time. But it does happen, guys. We're humans, we're emotional, and yeah. So as we got that retest, boom, break and retest the structure. The reason why, as I just kind of showed you and illustrated there, is that this low, right? This low right here was violated, So at this point, to me, at least in the short term, this was no longer a market for the bulls. In my head and in my 5 years knowledge of the market, if the bulls were serious about continuing to keep this uptrend going, at least in the short term, they would have protected this level. They would have not allowed bears to break this zone. So boom, get the breakthrough, retest, boom, all right? So let's move on to the second reason, because again, you want to have multiple reasons why you're getting into the trade. Fibonacci retracement. So a 38.2 retracement, level respected for 3 straight days. Let me get into what I'm saying here. All right, Fibonacci retracement level right here. All right, from swing high to swing low. And I'll go ahead and do this for you guys because I do my fibs, and this is just kind of my strategy, if you will, on the break and retest. I do my Fibonacci retracement not from the swing high all the way down to this swing low, because again, this hadn't happened yet. So I do mine from the breakout. All right, so swing high to swing low of the breakout. All right, and as you can see, we have that 382 level coming right here at the top of that structure level. And that was respected for 3 days. 1 here, 2 here, obviously didn't quite get up there, but 2 3 days, this 382 Fibonacci retracement level was respected. So I have this structure, break and retest, and now the bulls are saying, no, we want to go ahead and push it back up. We want to go ahead and push it back up, but they failed to do so, right? So they made their attempt, failed to do so. So we have a 382 retracement level protecting that structure zone here, not to be broken. All right. And then I want to go ahead and talk about the double top on the 4-hour chart. That was the last piece there. And I got in a little bit before the double top had completed, because again, I was, you know, seeing multiple days of the 382 Fibonacci retracement level being respected. And then again, a fundamental break and retest. I was already really good with this trade and had my reasonings to get involved. If we can see here, you can see basically the double top here, right? So on the 4-hour chart on a lower level, there's a respect here, and we failed even on the lower level to create some you know, new structure high or whatever, some new high. We basically came in and made a double top. So you got a double top here, as you can see, and then the market fell down to the downside. All right, so hop back down, hop back up to the daily. So we have 3 reasons, guys, 3 reasons why I got involved in the trade. 3 reasons why I got involved in the trade. Structure, fundamental, break and retest, right? This level here, this low was violated. So I was looking for a retest. Little FOMO, fear missing out here. Fine, cool. Like I said, lost about 3 or 4 pips. Was able to get in back here. And then as you can see, man, this was, like I said, like an 85. I think my top entry was like an 85 pip trade. 85 pip trade. And why? Because I understand the language of the market. I understand the language of the market, and I understand how to also have confluence with understanding patterns such as like a double top on the 4-hour chart, and understand how to, you know, through back testing and through my experience with Fibonacci retracements, how to put something together that works for me. And so when you have a structure and break and retest, a fundamental thing that everyone knows or should know, a 382 retracement that was respected for several days. And even while in the trade right here, as you can see, because I wasn't always in positives, right? So I got in on this candle. As you can see, I was in some heavy drawdown. And so as you can see here, heavy drawdown. And I was probably, I think when the market came up here, probably like 6 pips out from being like stopped out. Keep it a buck with you, about 6 pips from being stopped out. But the 382 was respected. So that gave me even more courage, like, oh yeah, you know what I mean? You try it again. So there you have it, guys. Forex made easy. It does not take a complex setup to make money in the market. I didn't need to wait for moving averages being crossed over. In fact, I know you see a moving average on my chart, but I actually don't use it in terms of being able to get out of a trade or get into a trade. It really just sits there to kind of show me the underlying trend on my daily chart, and just to kind of show what's going on. But I didn't need a MACD. I didn't need all of these momentum to show me that there's momentum or whatever in the market now that it was gonna. I didn't need any of that. I didn't need all of that. I needed simple understanding of fundamentals. For my basketball players out there, man, one of the greatest centers of all time was Akeem Olajuwon, man. One of the greatest power forwards of all time was Tim Duncan. And the reason why these guys were extremely good at their craft is because they understood and mastered the fundamentals. They understood and mastered the fundamentals. They weren't fancy. They weren't any of those things. They just mastered the fundamentals. And if you can master the language of the market and then piece together with Fibonacci retracement, Fibonacci extension, which I'm going to show you here in just a second on how I plan to get out of the trade. Double top on the 4-hour chart. So multi-frame analysis, right? Multi-time frame analysis. If you can piece together those things, I promise you Forex is not that hard. Master the fundamentals, man. Master the fundamentals. All right, lastly here, before I wrap this video up, I just want to show you my reasoning for exit out of the trade. As you can see here, I do have this marked up for you. So this was basically a zone, right? Once we came out of this structure level here, the market found a rejection point, right? And then came back down and then broke up and created that structure high, right? Earlier, I captured this as one move, but I want to show you the reasoning for me getting out of the trade where I did. And the reason why is because this point right here, this structure point right here. And so basically I marked that zone up, and then again, combined with Fibonacci's, and in this case, I used Fibonacci extension. So I ran my Fibonacci extension from swing high down to the breakout, right? And right back up. And I'll make a video one day of, on how to use Fibonacci retracements and extensions for you guys who don't know how to use it. But I ran it from swing high to the breakout low, and back on in. And as you can see, we have a 1.272 Fibonacci extension level. And I took out right before it. You can see that orange line right here is where I took out for my profit. So boom, that's how I knew where to get out of the trade. And luckily I did, guys, because massive green candle on the next day would have taken basically most of all the profit away. You know what I mean? And with this big old wick right here, would have honestly knocked out one of the trades or whatever, especially if I would have moved it to break even. So understanding when to get out is just as important as understanding when to get in. Piecing all that stuff together, guys, and you get a trade like this. And man, it doesn't have to be hard. It doesn't have to be hard. I didn't show you anything too difficult, man. I showed you simple market structure. Again, if you have not watched my video on understanding the language of the market, do go watch it. Please go watch it, because it's going to be extremely beneficial for you. And I promise you, if you watch it, maybe you might not get it on the first time. Maybe it might take a second time. But if you watch it, it will lock into you, and you will be able to start understanding the language of the market. And the other thing I've showed you is just the use of Fibonacci extension and retracements, right? How you can use that in confluence with market structure, how the 382 came right into the structure zone for the entry, how it was respected on multiple days, and then boom, drop. And then on the extension level, how I use that in confluence with this previous structure high here on knowing when to get out of the market. I mean, it's right there, guys. And double top on the 4-hour chart, which you guys understand, simple chart patterns. It's nothing extreme. So don't believe out there that it takes a just extreme setup or this extreme strategy to make money in the market. Master the fundamentals, and it first starts with understanding structure. All right, guys, I'll go ahead and wrap that up, man. My hope for you, my prayer for you, man, is that you never give up. If you truly believe that God has something for you in these markets, man, keep continuing, keep grinding. I've been where you've been as a struggling trader, talking to my struggling traders out there. I've been where you've been, and I didn't give up, man. I did not give up. I've been where you've been. According to Deuteronomy 30:9, the Lord God says that he will prosper you in all the works of your hands. So my prayer is for your continued favor, wisdom, and prosperity in the foreign exchange market. Take care, guys. Thanks for watching the video. I'm out.